I'm going to explain why you should never use a fixed stop loss or even a fixed profit target on every single trade. Let's get into that and more right now. Hi Forex traders, it's Andrew Mitchem here, the Forex Trading Coach video and podcast number 266. Now, a question that I get asked so many times every single day, it's all about, hey Andrew, where should I put my stop loss? Where should I put my profit target? How many pips should I risk on each trade? I like to risk 15 pips, and therefore, how can I trade the daily charts? All sorts of really interesting questions like that. And generally it comes back to people's misunderstanding of market conditions and how to trade properly. Because you see, in my opinion, you should never, ever think about using the same stop loss or the same profit target on all trades, because every trade's different. Every trade's, market conditions change all the time. When people come to me and say, hey Andrew, I want to risk 15 pips on a trade, it's like, well, why would you do that? What is the point? What's the relevance? What's the reason? Why not 17 pips or 12 pips, But either way, don't use a fixed stop loss because it's meaningless. Let me explain why. Each currency pair has different characteristics. So for example, if you looked at the average range on the Euro New Zealand or the Pound New Zealand, let's say, maybe several hundred pips per day it might move. But you then look at a pair like the Euro Franc or the Euro Pound, and it might move 50 pips in a day. But 50 pips on the Euro Pound could be quite a big move. Whereas, 150 pips on the Pound New Zealand in a day could be quite a small move. So it's all relevant to and relative to the currency pair that you are trading. But it's more than just that. And of course, you need to be aware that different currency pairs pay out different amounts per pip also. But take that a step further. It depends on what time frame you're trading. It depends on the time of the day possibly. Is it in the Asian session when generally not much happens? Is it in the European or US session? What month is it? What time of conditions, what time of year and the conditions are right now. If it's Northern Hemisphere summer season, the market might be a little bit flat. Now this week, or heading into next week, we're coming up to the week before Easter. Conditions may be very, very flat, or they could be very, very volatile. We just don't know. So the only real way you can do this is to put your stop loss and your profit target according to the market conditions right now. Because I can't say that I'm going to put a 25 pip stop on a Euro US dollar 1 hour chart next week. Because next week it could be really, really flat or could be really volatile, depending on all sorts of news events, as I said, leading up to Easter, all sorts of things that right now I don't know what's going to happen. But what I do know is that when I see a technical setup on a chart, if I put my stop loss at a set level, it's irrelevant. If I put my stop loss at a level that's applicable for that trade on that time frame, on that currency pair, with the market conditions as they are right at that time, I have myself a very safe stop loss. The same with the profit target. You have to use current market conditions at the time. So to give you just a quick overview, the way I trade is I split my trading up into two slight variations when it comes to stop losses and profit targets, and that's according to the time frame of the chart. If I'm trading what I call the quicker time frame charts, which personally I don't do a great deal of because I don't need to, but if I'm on a live webinar with clients, then I'll look at 1 hour charts or lower. And if you like those shorter time frames, go for it. But if I was trading, say, a 1 hour chart or 30-minute or 15-minute, I'd look for my candle setup first. If I was taking a buy trade, I'd look to put my stop loss below the setup candle low, unless there was a reason to go lower. And that reason to go lower may be a round number nearby or a pivot point or a previous swing low, etc. like that. But in general, it's at the low of the setup candle for a buy trade if I'm trading a shorter time frame chart. Profit targets are all worked out, again, according to previous highs and round numbers, etc. And I can help you with more of that and teach more of that in my course. Now, with the higher time frame charts of 4 hours and higher, which is what I generally prefer to trade myself manually, I'm using fib levels, I'm using fib extensions and fib retracements, and a really easy to use way in real time. Not the traditional look for swing highs and lows and guess which is the high and low and draw fibs and All that's great in hindsight, but in real time that's very, very difficult to use, a little bit like Elliott wave theory. But I have a very simplified way of using fib levels to help me with stop losses and profit targets that becomes relevant for the market at the time, what the market conditions are doing right now. So if you'd like more help with that, what I suggest you do is have a look on my website. You'd also find that I've been doing this, teaching for 9 years. You'll find on the Forex Peace Army website, on the review website, I have 9 years of clients' reviews. Now, not too many other educational companies can say that. 9 years is a long, long, long time. Been trading the same way, the same strategy, and helping thousands and thousands of traders all throughout the world. If you'd like to join us, it's a great time to get on board. It'd be great to help you trade successfully and just understand market conditions and things like we've just been talking about how to best use stop losses and profit targets to give yourself a high probability chance of being a really successful Forex trader. Use our help to help you to take that next step and to get there. So once again, this is Andrew Mitchem, the Forex Trading Coach. Have a great weekend. I'll see you this time next week.